This is the MTPredictor weekly market update for February 10th. Well, let's start with our S&P here. Again, we had this move higher. You see where the next resistance level is. Again, I've been keeping track of the volume, and the volume has been following the move up. And you see Friday, last week anyway, we closed near the highs for the week. Ran into some 60-minute resistance on Friday in the S&P, and that kind of butted its head up against there and wasn't able to move any higher after the initial move up early in the morning. But the major resistance, basically what I'm saying, I guess, is I don't expect this thing to correct until we get around 1520 to 1550. That'll take us into this major decision point resistance area here, similar to what we had here. Once the market came into that major resistance area, we got correction there. And so I think next week maybe they make that kind of final push into 1520 to 1550. It's kind of a larger area resistance because this is the weekly chart. The other interesting thing to note is you can see the Dow. Again, we know our cash Dow reached 14,000, but the futures contract still is just shy of 14,000. I think the high last week was at 13,975. So it's edging closer, but has not been able to hit that 14,000. Obviously, if the S&P hits that 1520 area, then this should finish off and get to that 14,000. 14,100 area here is where your typical wave C resistance will come into play there. We've already taken out the minimum wave C, so if the S&P can move higher, it should take the Dow up to 14,000, at least the futures contract. Those two will then confirm the cash. But again, the problem now is still the NQ here. You see, again, the 5-wave pattern up, the impulse move down there, and then the corrective move back here into this wave 2 or B. All right, so if we don't take this area out, we still had a positive close last week, but it's still not taking us out of that, out to that 2800 area in the NQ, the March contract here anyway. And so the S&P, it's possible that they get to their targets, the Dow gets to that 14,000 without the NQ maybe getting out of this area, at least closing above this area. If we get a close above that area and the high gets taken out, then I think we make a run at the prior swing high, this wave 5 swing high here, with your next resistance above 2,900. But if the S&P and the Dow get to their resistance levels, that 1520, 14,000 plus area there, and this is not able to take that area out, then we've got everything in resistance, and we could fall from there at that point. And we could project down. At a minimum, I would say we would look for this to be a C leg down to 2,500. Worst case, probably would get the wave 3 down if this ends up being a holy grail. Let's go wave 3 down here. Obviously the bigger target all the way down to around 2,200. So but I think the S&P got a little more upside before we hit the beginning of resistance. Again, get that Dow future contract of 14,000. Watch this. If they can't get this out of this area, then maybe everything corrects together at that point. But the NQ just correcting in a position where it hasn't broken that high like the other markets have. So this is again a market that is diverging from the others, and it has to be watched and taken into account. We've been watching Apple. Let's just take a look. Apple Computer here. Again, here was the wave 5 5-wave pattern up there. Again, the typical correction is back to the wave 4 DP. We got that, and we got a close below that decision point, and the low on that is 435. So if Apple takes out 435 to the downside, obviously that would be a big negative, and we'd probably visit the 200 period moving average, or worse, this whole 5-wave pattern up would then get wiped out to the downside here. And so as far as what we've had subsequent to the close is we've had 2 higher closes, and so so far this area is holding. But if they take that area out, watch for that drop down to the 200 period, or worst case down to just above 250. But you can see Apple going back to 2004. You know, you had the golden cross there, and again, this is similar to when we look at the chart of gold using the 200 period, the 50 period moving averages on your weekly chart. Obviously, it's been in a bull market. The good buying opportunities are below the 50 period, above the 200 period. Right. This was the crash of 2008, and we saw, you know, all these markets kind of move in tandem. So gold, which normally is not, you know, typically is not correlated with, let's say, the S&P. All these markets were moving down together. So here's Apple moved down to the 200 period before it regained. You see the 50 period never crossed below, and then it resumed that upward trend. And here we are again below the 50 period. So if you're going to be a buyer in here, or if you were a buyer in here, a stop would be below the low here, because if that gets taken out, then you got to risk the 200 period and then below that. So keep our eye on that. All right, oil on the weekly chart. Again, we had our TS1 buy signal there. That's, you know, still had a pullback there last week, but, you know, still in the headed in the overall in the upward direction. And we'll see if that can finish out at that $101 level there. If, you know, certainly can have your stop to break even, or should have your stop to break even at this point if you're along that one. Let's look at gold. Needed to pull up the continuous contract there. So if we go back on gold, again, similar to Apple, you know, Apple was in a bull market in 2004. This in since 2001, and again, we went through and we saw that every subsequent year after 2001, gold has made a new high. Again, the buying opportunities below the 50 period, above the 200 period, have all been good buying opportunities. In gold, here was again the crash of 2008. Just saw, as we saw Apple, very similar, as it you know, traded below the 200 period but snapped back. In there again, the 50 period never crossed below. Again, these are all good buying opportunities. So here, when we come to the present here, we've got no new high in 2012, first time in, you know, since 2001 that we hadn't gotten a new high in gold. And this tells me that the, you know, the bull market at this point is not over. There we had a buy signal here in gold that really hasn't made any progress, but because of the no new high in 2012, I do think this is now a period of maybe consolidation, maybe a little resting period, you know, for gold. And at some point, I do think this will become unhinged. Like we said, it's been, you know, been moving with the markets, you know, the stock market, let's say, as it did like in 2008. And you know, historically, usually gold doesn't move, you know, with the stock market. It's more interest rate sensitive and so forth. So I think maybe we get some consolidation. So if you're a longer term player, you know, watch these levels. Obviously, if we breach, you know, we could have a, if we have a crash in the stock market, I wouldn't be surprised to see, you know, gold come down with it, as we did in 2008. But watch the, you know, the 200 period. We can trade below it. but we don't want to get too far beyond that. If it does, then maybe the picture has changed and things need to be reevaluated. But if you're a longer term holder, using it as a hedge against inflation or something similar to that, then like I said, maybe we get some consolidation for a while. You're just going to have to be patient on that. Same thing with, we could use this for the outlook for silver as well. All right, then let's look at, I told somebody I would be looking at the Euro US dollar. We'll take a peek from the weekly standpoint here. Again, the Euro US dollar, we had that 5-wave pattern down here. We did correct back to the wave 4 DP. And now we've got a sell signal there on the weekly chart. STF is red, so it's a valid sell signal. If we put the analysis on, you see it's looking for a reversal here down to 1832. We should have, if we take a decision point off the B swing here, ahead of that we'll have resistance here in the we'll call it 2500 level, 2514 in the euro. And so if this does continue to sell, if they do take this area out to the upside, again it's a decision, we call it decision point area. And so if that gets taken out to the upside, then we'd have to go back to the top of wave 1 here. And that would tell us that if this area gets taken out, then the euro should continue higher into that 47.25 area. But so far we've got a sell signal to the downside. You see the ABC corrective pattern there. And your next support level is ultimate target there at 1832. Which means if that does sell off, then we'd actually see the dollar index here. Again, this is bigger picture stuff. We would see the rally in the dollar. And you see the bigger target here at 84.82 off the major low. Back here, like I said, this is when you're Jim Rogers and those people were buying the US dollar back in here just because basically people were bearish on the dollar. You just thought they were too bearish, but we had a major decision point signal with a high volume spike telling us that professionals were in fact stepping in there. So it's not been a nice straight smooth line like this to the target, but we'll see if the euro does in fact sell off from the position it's in. Then we should get a move in the dollar at least into maybe this 84.82 level before it finds some major its next major resistance there. So we'll see how those play out. And just one last thing before we hang it up. This is just our standard trade setups that the software provides in the Dow Mini on the 3-minute chart here after your commissions and expenses and so forth. But this was the month of January, so we had a pretty good month of January after expenses returned about 26, almost 27%. And so that tells us that the market is in a good cycle right now. We'll see as that changes. As markets cycle in and out of good periods and not so good periods. We're in a good period as far as the equities go. That will probably be coming to an end fairly shortly. Maybe once we hit those resistance levels, maybe we get some consolidation, more choppy action on the intraday stuff. So keep an eye on that. All right, so we'll leave it there. I wish you all a good rest of your trading week, and we'll see you back next Sunday evening.